Traditional asset classes are stocks, bonds, and cash. Everyone knows what cash is. Everyone knows what stocks is.
I don't think a lot of people know what bonds are.
It's a way that a company borrows money from investors. Once a business reaches a certain size, normally these are publicly listed companies, they'll issue a bond. They pay a certain dividend or yield on that bond, and so investors buy that bond. Investors are essentially lending money to the business. That business then uses that capital to go and expand operations.
It's a fixed term, right? So a company might issue a bond and say, hey, we're raising $100 million. Over 10 years, we'll give you a 6% ticket rate on that, so you're getting 6% per annum, and at the end of the 10 years, you get your money back.
That's exactly right. Humans have only found two ways to fund a company. It's debt or it's equity. At the stage that, your businesses are at, it's either private capital or a bank that's going to lend you debt, or you need to issue equity to raise future capital. So if a business doesn't want to raise equity to dilute the existing holders, and they can issue a bond. But equities, bonds, and cash, traditional asset classes, and then alternative investments is everything else, which is private equity. So you're owning equity in a private business. So if someone comes along and invests in Henderson, they're buying a stake in your business. It's a private business. That's private equity.
For example, a client of ours sold Laser Clinics Australia, $600 million exit. A private equity business, being KKR, bought that.
Bought them out. Absolutely.
Yeah. So you could invest through KKR to own a piece of that company.
Absolutely. The businesses that are private these days, some of them are enormous businesses. So people think about, if they're uneducated about venture capital or private equity, they think that these are speculative small businesses that people are investing into. SpaceX is a private company. OpenAI is a private company. These businesses could easily be listed on a stock exchange if they wanted to.
Yeah.
They're choosing not to because there are benefits with staying private. You don't have to produce a quarterly report. There's not the short-termism of investors looking at what the business is doing week on week, because it takes years and decades to grow a great business, right? A lot of entrepreneurs like Elon, and he probably learned his lesson with Tesla and said, okay, well, we're going to keep SpaceX private because, there's a lot of public scrutiny that comes along with being a public company. So a lot of great businesses are staying private, and so to access that opportunity set, you need to be investing in private equity. Real estate is a private market asset. So when someone buys their family home and or investment property that you help them purchase, that's not listed on an exchange anywhere. It's not mark to market daily as well, right? So if they buy for $2 million, something happens when Trump overseas, the unit price doesn't drop down. It's why people normally view real estate as a much superior asset to others, because they hold it for so long, and there's an emotional benefit of being private.